Hi, and welcome back to ENTP Life. This episode is a continuation of how to start a home care agency. And we're going to be covering exactly what sort of business structure should you be using when forming a new company. Now, for those of you who are coming to ENTP Life for the first time, on this channel, we mostly talk about real estate. We're now starting to dive deeper into my other business, which is home health care. And I'm trying to show people as much of my interest as possible outside of business here on this channel. So from time to time, you'll see things on real estate. You'll definitely be seeing things on home care agencies and any of my other interests. So if that's something that does interest you, please make sure you hit that subscription button. And don't forget to like this video because it helps to promote the video within YouTube's algorithm of how they promote videos. If you have any questions at all, please leave them in the comments section below. So in today's episode, I'm going to be covering what type of business structures exist and what business structure do I use for real estate and what business structure am I using for this company in particular. So the most common type of business in the United States is actually a sole proprietorship. Now, this is for people who are opening little shops, maybe food carts, very basic businesses, or they're just independent consultants. You go down to your county clerk's office or whatever it is in your jurisdiction, and you pay a fee, and that allows you to function as a business, okay? Now, the benefit to that is that you have the legality to operate as a business, right? But I've never actually formed a sole proprietorship in my life, and I've had quite a few businesses. I don't really like them because they don't give you any protection as an entity, and there's no separation between you and the entity. You can't build credit for your sole proprietorship. It's pretty much you saying that I'm in business for myself, and there's no benefit to it. I guess the only benefit is that you're functioning legally, and that's about it. I can't really see what the benefit is. So for the sake of what we're doing here, starting a home care agency, throw the sole proprietorship out the window. It's not for you. Now, a step up from a sole proprietorship would be a partnership. Now, this is another legal entity where you and other people are coming into agreement to have a business and form a partnership. Once again, this is something that I've never done, and I wouldn't recommend to anybody because I've never done it before. The only thing that I could see, a partnership being is a sole proprietorship amongst multiple people. I don't really know what the protections are for a partnership, and I really don't know why anybody would have a partnership in this day and age. Now, before we go any further into the two types of entities that I actually use in my business world, is that I'm not an attorney and I'm not an accountant. So anything going forward is just my opinion. Don't take it as legal advice or accounting advice. Always consult the experts, always consult the people who are licensed to do that because, that's what they went to school for and they should be able to advise you properly. Don't sit there and say, Karl told me that this is the way that it is and that's the basis for why you structured your business the way that you structured it, okay? Always consult the experts. So the third company type that I'm going to talk about is an LLC. Now, LLCs are more common nowadays than when I first started getting into business. They didn't really use LLCs too often back in 1996 because they're more of a new company structure. And what LLC stands for is Limited Liability Company. Now, these came to be to kind of provide an extra layer of protection for whoever the owners are or the operators are of this company. And what I mean by protection is separation between the people who are running the company, the assets, and the company itself, okay? And what does that all mean? Well, the best example I could give you is that when you're, driving around in your car, right? You are a liability, right? And the reason why you're a liability is because you could get into an accident. You could hit somebody, you could hit a car, any of those things could happen, right? And once you've had this accident, you're going to most likely get sued, right? Anybody who's been in a car accident knows that that's the end result. You're going to get sued for the damages to the other vehicle and maybe some medical bills, right? But in some cases, it goes further than what your insurance covers. And someone can now sue you for the things that you own, your assets, okay? Now, your assets could be shares of a company. It could be your real property, your home, your vehicles and all those sort of things. And the limited liability company was created to kind of shelter from that exposure. So what you tend to find is that people will use LLCs when they're creating funds, when they're investing in some sort of asset class, or if they want to protect their asset class, right? So when I'm using an LLC, it's usually to either create a fund, right? Well, whether it's my Solus fund for real estate investing or my Opportunity Zone fund, I always create my funds in the structure of an LLC, once again, to protect that capital, to protect whatever assets we're going to be investing in. And then I also use LLCs to be the owner or holder of record for real estate. So when I'm buying real estate, I put the real estate into an LLC as well, because I want that company to be the owner of record. So if I'm in a car accident and people are suing me and trying to get more than what my insurance will cover, it doesn't expose my assets, right? It doesn't expose that real estate asset that I have. And oftentimes your lenders, especially for investment properties, will want you to have it in an LLC as well for the same exact reasons. They don't want to risk that property going into litigation for something outside of the business, and then their money that they've lent you is exposed to that risk. So, that's kind of why the LLC came to be and why a lot of people use them. What I've noticed is that some entrepreneurs just want to start LLCs because it seems different and they don't quite understand the purpose of it, so they'd rather be, whatever my company name is, LLC rather than INC. That's actually a real thing that I've seen people make that decision, and I don't get it. Now, typically, when you're forming an LLC in New York, for instance, you have to do what's called a publication for it to become, I guess, legal, right? So you form the entity with your Department of State, right? You register, you fill out the paperwork for that, and you pay for it, and it becomes an official company registered with the state, right? Then you have to do the publication, which is literally running that you've created this entity in the classified section of major newspapers that are heavily circulated. They have like a circulation minimum, like it has to be 10,000 subscribers or more, something along those lines. And you have to run the ad in paper for 2 weeks. And with that comes a fee. So that publication fee might cost you $1,000 in addition to forming your entity. And it becomes pricey, right? So, it doesn't quite make sense to form an LLC, in my opinion, unless you know for sure that you're going to be safeguarding some assets, all right? If you want that layer of separation and protection for your assets, then an LLC is the way to go, right? And for those of you who come to ENTP Life for that real estate advice, I always recommend using an LLC to own and hold your real estate, and then maybe a corporation, which is the next entity type that I'm going to talk about, to manage those properties, okay? Another thing to touch on with the LLCs is that they have the ability to be taxed a few different ways, okay? You can choose to have your LLC taxed like a corporation, which has its own guidelines, or you can have what's called pass-through taxation, right? And that pass-through taxation means that the profits or losses from this LLC can transfer to your personal tax return, okay? And you'll file as such that, hey, I had a $100,000 profit for my LLC. That $100,000 will get reported on your federal tax returns and your state tax returns, and you'll pay taxes according to however you adjust it as a person. Same thing with the losses. If you had a $100,000 loss, you could move that $100,000 loss onto your personal tax return. And let's just say you made $100,000 that year at your W-2 job, but you had a $100,000 loss in your LLC because of depreciation of your asset, for instance, right? You could take that $100,000 loss because of depreciation and apply it towards your personal income and have a net income for the year of zero, meaning you'd pay no taxes or get a larger refund, right? So, that's one of the tax benefits of an LLC, is that you could kind of choose to treat it as as a corporation or as a pass-through entity. And once again, these are things that you should be talking to with your accountant for clarification and better explanation than I can offer, okay? So the next entity type that we're going to talk about is the one that I used for Aaidebook. Now, this entity type is designated with the, I guess, subtitle Corp or INC or corporation, right? You're going to have to choose one of those to be part of your name. I chose the corporation designation for Aaidebook mainly because I plan on taking this company public, right? And my process to doing that is going to involve, raising capital, distributing shares amongst founders, and eventually distributing shares amongst whoever my shareholders are who are investing into my company, okay? And typically, in comparison to an LLC, which gives out membership certificates, which sort of designate your ownership, membership certificates don't really have any value. Like, you could raise money with membership certificates, of course you can, but they don't not quite necessarily translate to shares the way that a corporation does, right? So for me, I'd rather issue shares and have shares as the basis of or representing ownership in this company, because that's the typical structure, and that's how things are governed in the stock market, right? And that's where I want to go. Now, that doesn't mean that I can't start as an LLC and make the shift when I'm going public. Of course I can, but it's cheaper for me to form my corporation. It's a cleaner structure and just easier for me to proceed that way. And that's why I chose that entity type. Now, a corporation does also separate the assets of the business from the person, except someone who sues me personally can sue me for my shares in Aaidebook, right? Which would suck, because if they were to win that lawsuit, they could sue me for any share of any company that I own, and then they would receive ownership of that, right? Meanwhile, you can't necessarily be sued for membership certificates. That's the main difference, and the difference in liability between a corporation and an LLC. Me, as the holder of those shares and owner of those shares, allows it to be brought into, I guess, some sort of legal proceeding and be taken from me if it were to go that way. The probability of that happening, who knows, I guess is pretty low, but it can happen. And that's what some attorneys or some people will kind of say, well, if you want to eliminate that risk, then go, not even eliminate, but if you want to try to protect yourself further from that risk, go with the LLC. So anyway, I decided to form a corporation here in the state of Florida for the new company Aaidebook, right? And I'm going to be designating that we're going to be issuing an initial 10 million shares, right? And those 10 million shares are going to be distributed amongst the founding team, additional employees that are going to get shares as part of their compensation package, and enough shares so that I can sell and raise money, right? So, selling shares or transferring shares in exchange for a cash investment in your company is typical. I can't sell these shares publicly because I'm not registered as a public company. But when I am raising money from the angel investors, VC firms, and friends and family, I will be using these same shares from this initial 10 million shares to do that. There's going to be a time in your process where you're going to have to decide, how are you going to be taxed, okay? And with a corporation, you could either be a C Corp or an S Corp. And I know this is kind of, a lot of information, but I think it's useful because for those of you who've never formed a business, this is going to be presented to you, for the first time, and you're not going to even know what to do. So I'm hoping to at least, spark the ideas or get some of these thoughts into your head so that you can research it a little further so that you can decide and make an informed decision when it's time to, okay? But a C Corp is, I guess, what I would call like your classic consideration, right? C Corps get taxed twice, all right? They get taxed as a corporation, and then the proceeds or the dividend distributions that go to the shareholders get taxed again, right? So any proceeds, so let's just say your C Corp made $1 million for the year, right? Aaidebook makes $1 million as a net profit, okay? or as a gross profit, right, before taxes. So it's made $1 million, and my tax rate is 30%, right? I'm just saying so. So I'm going to have a tax bill of $300,000, right, for Aaidebook. So I'm the owner of all the shares, and I decide that I'm going to distribute that $700,000 directly to me as dividends, right, and my net proceeds as a shareholder. So now, from Aaidebook to Karl I, the shareholder, I get $1 million, okay? Now, those dividends that are hitting me personally are going to be subject to taxation as well, all right? So when you're the owner of a C Corp, you're going to get taxed twice, right? Once on the top line for your business itself, right? The business gets taxed, and then the profits that are distributed to the shareholders get taxed again when it's time for you to file your personal taxes. So you get taxed twice, all right? And this is something that people don't realize. When they go around saying, you know, corporations are getting all these tax breaks, they should. Main reason why is they're creating jobs. They're getting taxed everywhere. They're getting taxed on services. They're getting taxed on the products that they purchase. They're getting taxed on payroll. They're getting taxed on their business profits. And once again, as the shareholder, you know, most founders are shareholders of their company. They get taxed on their profits again. So they, of course, should get tax breaks because they're spinning off tons and tons of tax revenue for the government. And I think people kind of miss that point. But that's another conversation. Now, if you chose to go the S Corp route, which is the other designation, it kind of has the same processing as an LLC, right, where you get that pass-through. So in the same example, if my company made $1 million, instead of getting that top line tax, that $1 million gets passed through to me as the shareholder, and it gets reported on my personal income. So it only gets taxed once. Now, you may ask, why would somebody choose C versus S? How does it, you know, why would anybody want to get taxed twice? It really just depends on what your goal is, right? If your goal is to scale and grow and raise money and go public one day, the C structure is, once again, the favorable structure, right? Because, you know, AT&T, they draw their revenue, they get taxed on their top line, they distribute dividends to their shareholders get taxed on that however they get taxed, okay? So, you know, that's just the way that it's structured. So you want to align yourself with the structure that is best suited for the business that you're going to be doing. So if you have no intentions of raising money or ever taking your company public, the S Corp designation might be the best option for you. Now, when you form a corporation, it is automatically a C Corp, right? That's a designation that is like by default. You have to elect to be a subchapter S or S Corp, right? And you need to fill out a form and submit it to the IRS, and they need to actually approve your submission, okay? So don't just think, hey, I'm a corporation, I'm gonna just mentally choose to be an S Corp. No, it doesn't work that way, right? So that's another one of those times where you should be meeting with your accountant and telling your accountant, hey, I've been thinking about, you know, which way to get taxed, or they should be asking you, and then you should have them do your S election, okay? And please make sure that you're working with CPAs. Don't just go to your buddy who's an accountant and say, hey, handle this for me. They may be able to do it, but you know, having the CPA designation kind of gives that accountant more credibility. They're recognized on a national level as being proficient in accounting. So have them take care of it, and don't do it on your own. Just, you know, I mean, the $150 or $100 that they're going to charge you to fill out this form, you know, I think it's well worth it for it to be done properly. All right, I've done it the other way where I've done it all. I've done it the other way where I try to do it myself. The election wasn't done. I get penalized later on. Just keep it simple. Go to the professionals. Have them do it the right way, and it's going to save you money in the long run, right? Don't try to skimp in that area. So another question that you may be asking is, how do you go about forming this company, right? Now, I did mention that when you're applying for your LLC or your paying to become an LLC, you're going to do that with your Department of State. Now, if you just research your state's Department of State and you kind of research starting a business or business searches or whatever the case may be, you could go down the rabbit hole and figure out, how much is it going to cost, the application process, and fill out the forms. I never do this on my own because, once again, I don't want to mess it up. So I either work with like LegalZoom, Bloomberg Excelsior, or with an attorney to form my corporations because they're going to take the responsibility of doing it right. Now, when you're using one of the services, they're going to ask you questions like, what is your primary choice for a name? What is your secondary choice? And sometimes what is your third choice? And that's because the name may be taken already. Once again, if you go to the Department of State website, you could actually search the names that you're interested in using. And from there, it'll tell you this name is not found. If the name is not found, then you know that that name is available, okay? But you're still gonna wanna use some variations of the names or have a couple different names out there because they may deny the name because it's too similar to something else, all right? Maybe like Facebook, right? It's too, like Phase, P-H-A-S-E, is too close to Facebook. They don't want people getting confused. They may deny a name like that, right? So you don't want to run the risk of that. So just have a few different names selected, right? And you want to make sure that your name is approved before you start designing logos and everything else. Maybe, because the name may be denied, right? But you could actually use a doing business as, right? Because every Subways, for instance, there's a corporation that owns the company itself, and they're branded as Subway because of their franchise agreement, and they're doing business as Subway. So when you register with the Department of State, your main corporation has to be unique, but you could elect to have a DBA or doing business as and name your company whatever you're going to function under that name. Now, obviously, if you were to function under the name Subway and you're selling sandwiches, Subway most likely is going to sue you because they've protected their name and they've trademarked themselves. So you're not going to be able to do that. But you, in theory, can, right? So make sure that you have some names selected. Research your Department of State website so that you know that that name is available and you eliminate those sort of risk. Now, when you're using a service like LegalZoom, their pricing structure is upfront. They're going to charge you a fee for doing the paperwork. They're going to charge you the fee for, the filing fees, right? Because there's the fees that you have to pay to the state. And they're going to potentially charge you for like additional corporate documents, right? They may give you a bare bones shareholders agreement or operating agreement. Shareholder agreement for corporations, operating agreement for LLCs. They may give you a corporate binder with a company seal, right, that has your company name on it. They may even give you your initial stock book. Actually, I'll probably go through a corporate kit with you in a future video so you can see exactly what a corporate kit looks like. It's a binder with all your documents in it and everything that you would need to kind of get your company started. Now, are you going to necessarily use that basic operating agreement or shareholders agreement? You might if you're the only person running that business, but if you're going to be taking on partners and investors, you're definitely going to have a lot of revisions to a shareholders agreement or operating agreement, right? So that's a whole different topic. But if you needed just something basic, because sometimes the banks will ask for it, or a lender may ask for your operating agreement or your shareholder agreement, buying that corporate kit that has like a template in there where you can just fill out your name and sign it is good to have, rather than going to an attorney and paying them, $2,000, $3,000 to do your shareholders agreement. You might want to have that basic one there. So you may want to pay for that. And that's typically, the usual setup. Now, in a state like New York, that kit and that process for a corporation may run you anywhere from $300 to $600, depending on who's doing it for you. Same thing with the LLCs, except you're going to have that publication requirement, which is going to add like $1,000. In Florida, we paid, I believe, like under $300 to set it up. And I don't even remember the number because I paid it in my consultation fees. So I think there was about $300 set aside for that. And I don't have a corporate kit. So I'm going to be ordering a corporate kit for this entity from Bloomberg Excelsior. I'll put their link in the comment section or the description below, because that's a service that I use often when I'm creating a new entity. I like how they function. Their price structure is good. I like the kit that they give. So I may just order the kit from them because my consultants haven't given me a kit yet, and I like to have my binder because it has everything that I need when the time comes. It has my seal if I need to seal contracts, if I need to seal a shareholders agreement, or if I just need to present it to the bank. Some banks actually want to see your corporate seal for whatever reason it is. So I like to have that kit on hand and in my office because I may need it for whatever reason or whatever comes up, okay? So I'm gonna link them in the description below just so you have access to that if you're going to be forming your own entity in the meantime. And like I said, this is a service that does it right and that does it sensibly. So all you really need to do is answer their questions, choose a name, pay the fee, and voila, in 1 or 2 days, you have an entity created. I sometimes charge a consultation fee for doing that, and it literally takes me 15 minutes to do, and I might charge $200 on top of their fee. If you wanted me to do that for you, be my guest. But I always tell people, hey, if you want to do it yourself, this is who you go to. Use this service. That's who I use most frequently, more often than LegalZoom. LegalZoom is a little more expensive, and they try to nickel and dime you as you proceed. Like there's tons of add-ons. So if I had to choose between LegalZoom and Bloomberg, I would choose Bloomberg. And that's it for this episode of how to start a home care agency, right? So what you should have learned here is the different types of businesses that you can start, what business structures I use in my real estate business and in my home care business, and some of the nuances and things to consider. Once again, you're going to want to research the difference between S Corps and C Corps if you're thinking the corporation route. You're going to want to research what is the liability protections that a LLC provides you, and you're going to want to talk to an accountant and an attorney and get their advice and feedback on which structure type is going to be best for you in the type of business that you're pursuing. Once again, thank you for joining me here at ENTP Life. If you did like this video and you're not already a subscriber, make sure you like it, subscribe, turn your notification bell on, and any questions, leave them in the comment section below. Take care.